So let's dive into a real puzzle in the high-tech world. It's about a company called Hesai. And by pretty much every metric you can imagine, they are absolutely crushing it. But as we're about to see, sometimes even off-the-chart success isn't quite enough for the market.
Okay, so let's just start with a basic question. When a company comes out and says, hey, we just had the best year in our entire history, what do you expect happens to their stock? You'd think it would skyrocket, right? Well, let's see what Hesai actually reported.
First up, for 2025, Hesai's revenues shot up by a massive 45.8% compared to the year before. That's fantastic growth in any industry. But honestly, that's not even their most impressive number. Get this, they shipped over 1.6 million LiDAR units. Now, to put that into perspective, that's not just double, it's more than triple what they shipped just 1 year earlier. I mean, scaling up that fast is just wild. And this is the real kicker. In an industry that is famous for just burning through cash, Hesai just became the first LiDAR company in history to post a full year of actual, by-the-books, GAAP-certified profit. They're not just growing, they're doing it profitably.
So with all that incredible news, record revenue, tripling shipments, making history with profits, why on earth did the stock fall nearly 5% on the very same day? That is the paradox we are going to solve right now. What is really going on here? All right, to really get this, we first have to appreciate just how unbelievably dominant Hesai is. Let's build the case for them being the undisputed king here, putting the stock market noise aside for a minute.
So real quick, what's LiDAR? Just think of it as the eyes for self-driving cars and other smart robots. It uses lasers to create this super accurate 3D map of everything around it, and it's absolutely essential for the future of autonomy. And Hesai, they make these eyes. And they don't just make them, they absolutely own the market. Right now, Hesai controls over 40% of the entire global market for this kind of automotive LiDAR. They are #1, and it is not even close. And their growth is just a rocket ship, from about 500,000 units in 2024 to over 1.6 million in 2025, and they're projecting they'll hit 3, maybe even 3.5 million for 2026. They are literally doubling or tripling shipments every single year. It's an incredible pace.
So, how are they pulling this off? Well, a huge part of their secret sauce is total vertical integration. Just like Apple does with the iPhone, Hesai controls everything from the ground up. They design their own chips, their own optics, and they run their own factories. This gives them this incredible edge on cost, quality, and speed that nobody else can really touch.
Okay, so as if being the undisputed, profitable market leader wasn't enough, Hesai just got maybe the biggest seal of approval you can possibly get in this entire industry.
That's right. In January of 2026, NVIDIA, the company at the heart of the entire AI revolution, they picked Hesai as the LiDAR partner for their industry-standard autonomous driving platform.
So why is this such a huge deal? Well, first, it's a massive vote of confidence from the most important AI company on the planet. Second, it basically unlocks the door to all the Western car companies that build their systems on NVIDIA's tech. And maybe, most importantly, it tells you that NVIDIA did its own work, and they decided Hesai was the safest, best bet out there.
All right, so the story so far is perfect, right? Dominance, profits, a killer partnership. But this is where it all gets complicated. Because hovering over all of this success is a huge, dark geopolitical shadow.
The thing is, Hesai has been put on a pretty serious list by the US Department of Defense. It's officially designated a Chinese military company. And this list, the 1260H list, well, it brings a whole lot of problems with it.
And the law here is crystal clear. It explicitly says that starting in June 2026, the US Department of Defense is flat out banned from buying or even using anything from Hesai. It's a hard stop.
Okay, so let's break down what this really means. The direct impact, the ban on selling to the DoD, is practically nothing. Hesai doesn't really have that business anyway. The real danger, the thing that has Wall Street so spooked, is the indirect impact. It's that reputational damage. Are Western car companies going to think twice about basing their self-driving future on a supplier that's on a Pentagon blacklist? That is the billion-dollar question.
And that brings us to the final equation. We can finally put these two completely opposite stories together and figure out why that stock price took a nosedive. And here it is, laid out plain as day. On one side, you've got this incredible business case, the bull case. #1 in the world, the only one making money, crazy growth, and NVIDIA in their corner. But on the other side, the bear case, You have this huge, scary question mark. The Pentagon list, all the political uncertainty, it's a massive headwind. And that is the answer to our puzzle. The stock didn't fall because the results were weak. The results were amazing. It fell because the market is staring at this impossible math problem. How do you value a world-class company when it's attached to a political risk you can't even measure? In the end, all that good news just wasn't enough to calm the fear of the unknown.
So this whole story, it really forces you to zoom out and ask a much bigger, much more fundamental question that goes way beyond just one company.
Can a company's success, pure business fundamentals like profit, growth, and innovation, can it ever really escape the pull of geopolitics? The Hesai paradox seems to suggest that in the world we live in today, the answer is, well, it's not so simple. And that's something worth thinking about.